Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Welcome to the Monday edition of Talking Real Money, the podcast. I'm Don McDonald. Thanks for listening. This will be a relatively short one today. I'm going to answer a few of the questions that come through Talking Real Money. I've got a backlog of a few, but I'm going to keep this one short because I'm doing this late in the day. This was a crazy busy day today. I got two things that I really wanted to get done today. I got the brand new, updated, not completely complete, but pretty close, updated version of Talking Real Money up on the internet. It's a whole new design. And I also sent out the latest edition of Real Investing Journal, the online free magazine. So if you subscribe to that, you should have gotten that. You should have gotten an email about it. If not, go to Real Investing Journal and just subscribe. And every time there's a new edition, you'll get an email saying there's a new edition. Some good stories this month, and I think you'll enjoy them. So here's what we're going to do today. Oh, by the way, just wanted to let you know, if you have questions that you would like to get answered that have something to do with money, then you probably should send them to me through talkingrealmoney.com, or even better, call them in 24 hours a day, 7 days a week to 855-935-TALK, 855-935-8255. I will answer every question I am able to answer. In fact, I don't think I've left any out yet. So call with your questions, 855-935-TALK, or you can type them in at talkingrealmoney.com, the new version. So let's see, what are we going to start with today? I think we'll start with this one from about 10 days ago. The subject of this email is banks as financial managers. And the note says, I have a friend who is getting hired to a new job where she will be making about 5 times what she makes now. She currently uses Chase Bank's financial advising services to handle her investment accounts. She thinks the investments are in Chase funds. Not sure if that's how it works or if they have a third-party manager. Is this a wise place to have money managed? What is the real fee structure? Should she move to Vanguard? Thanks. Oh, this is the issue. You know, with these big firms, they have now moved into the offering of fee-only financial planning services, but they're not acting as fiduciaries in many cases. And if she says she's working with Chase funds, she's working through Chase. It's probably J.P. Morgan Chase, not Chase proper, but it's the same company. And that she's in Chase funds, it's very likely that she is in Chase funds. And I looked up one of the more popular Chase funds, the Chase Growth Fund. The Chase Growth Fund has annual fees and expenses of 1.26% per year. Plus, it's actively managed. That makes it more expensive. That is ridiculously expensive. That is at the highest end of the major firms. So you can see why J.P. Morgan Chase advisors would advise that people get into these funds, because the company makes more money. They're probably encouraged to do that. One, I don't like active management. I don't see the point. I don't see the value. And if you look at the performance of this fund up against the market itself, you really see how bad their performance is, how they're not very good managers, and how their fees drag down returns. You want to make a comparison? Take a look at the VTWAX fund, the Vanguard Total World Stock Index fund that we suggest a lot. The fees on that fund are 0.1%. That's less than 10% of what Chase charges for its product, that growth fund. So, yes, would she be better off at Vanguard? Absolutely. At least from a fee perspective. Performance-wise, I'm pretty confident she's going to do better. More broadly, diversified portfolios, lower fees and expenses, stay away from active management, just deal with indexes or very passive portfolios. And if she needs fee-only help, there are a lot better people out there to go to, in my opinion, than J.P. Morgan Chase or Morgan Stanley or Merrill Lynch or any of these folks that are going to charge, high fees for their advice and then often put you in high-fee products that are truly not in your best interest. You rarely see these firms putting people into Vanguard. Why? Because there are usually no additional benefits that accrue to the firm. In fact, there are no additional benefits that accrue to the firm when somebody gets a Vanguard fund. So, yeah, would I move? Absolutely. Would I find, if she needs an advisor, I would find a truly 100% fiduciary fee-only advisor who's willing to sign that, put that in writing, and who uses true no-load, low-fee funds. The manager should never, even if your portfolio's $500,000, should never charge more than 1% per year. Period. And the more you have, the less they should charge. And the mutual funds in your portfolio should, in aggregate, cost no more than 0.5%, 0.5% per year. Those are questions that must be asked. I know it's uncomfortable to do it, but you need to do it. That's why we have our advisor interview form at talkingrealmoney.com. You can download that, take it to them, and there's a little box that says, how much do you charge? How much do you charge? Are you willing to say you always act as my fiduciary? Put it in writing. Then, down the road, if they put you in a high-fee, actively managed fund when something else is clearly in your best interest, you have a bigger pile of ground to stand upon. So if you have a question, give me a call, 855-935-TALK, anytime. I'll answer those questions on the daily podcast. And you can also send those in at talkingrealmoney.com. The new look, talkingrealmoney.com. Check it out at talkingrealmoney.com. Our next question is in relation to a show of a couple of weeks ago. The topic is Schwab Brokerage Money Market Fund. And the question is, someone called in and asked if it would be okay to use Schwab Money Market Fund that was paying 2.29%. And here's the ticker symbol, the SWVXX pays 2.29%, but has a gross expense ratio of 0.47% and a net expense ratio of 0.35%. Isn't the 2.29% reduced by the 0.35%? That wasn't mentioned. Well, the reality is the quoted return as of that date is the actual return, the rate being paid after fees and expenses. So the actual internal rate of return on that portfolio, the money they're actually making, is 2.6%, 2.64%. Which means that they're probably stretching a little bit for yield, but because they have so many assets in that portfolio, the risks remain very low, and they promise never to break the buck. And I can't even imagine what would happen if Schwab ever had a money market fund go below $1 per share. So I really would not worry about it. And the yield you see is the yield you will actually get. 855-935-TALK. That's our number, 855-935-8255. And let's see, I've got one more. And it's not really a question I can answer. It's more of one I'm going to mention on the show so I can get more information so I can better answer it. And the question is, it says, I really enjoy your podcast. I was just reading, I just read this article and I'm a little confused with all the numbers. Safe withdrawal strategies from a stock bond portfolio. Can you help me understand and comment on the conclusion? Looking forward to your comments. I look forward to my comments too, but you need to send me a link. If you're going to send me something I need to read and comment on, please send me the actual link. Copy in your browser, copy the whole link, and then just paste it right into your form when you send that in at talkingrealmoney.com. And finally, as I mentioned, I don't know if I mentioned it on the podcast or not. I know I mentioned it on the show, which became a podcast. This summer, I am going to be Airstreaming across America in my old Airstream, and that I'm just getting fixed up. We just camped in it a little while ago to try it out and found out we need a few more things fixed. And some people are giving me route ideas, which is kind of cool. What I'd like to do along the way, if it works out, and this is no promise, is maybe stop along the way and get together with small groups of people and talk about money and investing. I'm even thinking about getting a signage for the Airstream that says Talking Real Money cross country or Talking Real Money on the road or something like that. So if you have some ideas where I might stop, just send them in to me, and we'll put them in the hat and see what we can do. And if you can get a small group together to do something, that's even better. That's going to move you up the list. So this offer was for me to stop by Notre Dame, not Notre Dame, Notre Dame, the school in Indiana. And I think we'll be going in a similar direction. I'm not exactly sure what part of Indiana we're going to go across yet. We haven't planned that part of the journey. We've only planned it as far as Virginia. That's as far. I live in Florida to Virginia. After that, we don't know where we're going. So if you have some ideas where we might go, and you can get a group of friends together for a little meet and greet on investing, I'll teach a little class and take your questions. So thank you very much, and you can send that in. Either you can call it in at 855-935-TALK, or you can send it in at talkingrealmoney.com. Check out the new talkingrealmoney.com. Also, check out the new stuff at realinvestingjournal.com and subscribe to that newsletter. And I think that's about it. I'm going to call it a day. It's getting late out here. Take good care. I'm Don McDonald.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.